Know that on the 18th of September, the MPC announced its latest decision on the repo rate, a decision that, of course, directly affects what South Africans pay on loans and bonds and credit, and also indirectly shapes food prices and fuel costs and even just the job market at large. And so with inflation still stubborn in key areas like food and transport, and with youth unemployment and a weak economic growth weighing heavily in on the country, the question that we're exploring today is, did the Reserve Bank strike the right balance between controlling inflation and supporting recovery? For this chat, we're going to have Annaline van der Poel, Debt Rescue COO, to weigh in further. Annaline, on that note, good morning and thank you for your time on the SABC at this hour.
Good morning and thank you for having me.
Annaline, first things first, the MPC's decision, the repo rate remaining unchanged at 7%. Perhaps you could help us understand what this means in plain terms for ordinary South Africans and the impact that it has.
Well, the impact for us ordinary South Africans means that our debt is, staying at the same rate it was, but looking at the CPI and the cost of living, it means that we are in essence actually moving backwards because our cost of living keeps increasing, our debt remains at the same that it has, which means essentially we're just put under strain, especially for over-indebted households, which are just growing every month. It's actually becoming more.
All right. I think we're losing some connection there. Let me just continue and see if we can reestablish that. Annaline, you've given us some context to what this really means, and really the average person caring about what this repo rate means, already worried about food, fuel, electricity bills as well. There's also another issue that compounds the matter, and that's South Africa's youth unemployment, right? That also remains one of the highest in the world. Higher borrowing costs, how does it make it harder for businesses to help create jobs for young people in essence then?
Well, the reality that we're facing at the moment is exactly as you said. We are sitting with a very, very high youth unemployment rate. And when it comes to freeing up funds for young people to start businesses, for example, to encourage entrepreneurship, we need to look at what is the abilities and can they repay these debts, etc. So it's a very difficult situation that we're sitting with because conventional employment is becoming less prevalent. In other words, we are trying to drive entrepreneurship, but entrepreneurship ultimately does require funding. You need some form of funding to get your business off the ground. And that is where the difficulty comes in now is proving for these young people, how would they be able to pay back loans if they were to take them to start up businesses?
Absolutely. And I mean, speaking more about that, young South Africans who are trying to start small businesses and side hustles to make a living, this decision by the MPC, talk to us about how it affects their ability to get affordable credit in the first place, to apply for those loans as well.
It's going to be very difficult because ultimately, from the National Credit Act perspective, a credit provider has to do an assessment to see if it's affordable, can they repay it, or alternatively, they will sit with the potential of reckless credits being decided against them. So they have to factor in all these various elements, and one of them is going to be the ability of this young person to start a business. Success possibilities and whether they'll be able to repay it. So it's very, very difficult when we're sitting with very high interest rates because their funding is so expensive to pay back when they're trying to start a business up from scratch.
Yeah, absolutely. I'm even just looking at some of the families and households that are already drowning in debt, and how this decision, whether it brings relief, whether it adds more pressure to their monthly repayments as well. Even first-time home buyers, students who rely on loans, right? They're being priced out even further. These are massive long-term ripple effects.
Yeah, they are massive. And the reality is, because we are seeing that the CPI, the inflation rate is ultimately still, we know the Reserve Bank wants it at between 3 and 6, but they are, leaning more and more towards the 3. And we're above the 3. We have been now for 2 consecutive months. That means that our cost of living keeps increasing, and it's increasing above what the preferred inflationary rate is that the Reserve Bank wants. So on the one side, we're contending with our continued high debt repayments. On the other side, we're contending with our living expenses increasing, and they're increasing on the fundamental items in our baskets every month, our food, our services, etc. Those are things that we pretty much have cut down to the absolute minimum already. there's very little room left to cut, and those items keep increasing. So the pressure is enormous.
And Annaline, these are micro dynamics. We obviously expand our vision and look at the macro dynamics that are also unfolding the world over. How does much of this decision get influenced by US Federal Reserve prices, by oil prices, rand volatility, compared to our own domestic challenges that you've also just spoken to?
Absolutely. All of those play a role. I mean, ultimately, there are things that are within our government's control to a certain degree, and then there are items that are completely and also completely out of the consumer's control. So we know that obviously the tariff hikes have been implemented. We need to still see what the real effect is going to be of that. We know what the expectations are, what the concerns are, and the risk areas. But we have to see what they look like when they come into play. And then we've got global, unrest going on in various areas. We've got, like you say, the oil price, the fluctuating rand. Even though the rand seems to rally back each time, there is that short period where it doesn't. And there's always concern as to how long will it stay there? Will it strengthen again? And we're a very, very import-dependent country, which means that if anything happens and the rand becomes unstable, it means it becomes so much more expensive for us to import. So it's a very, very tough situation at the moment.
And Annaline, to the point about the MPC's decision and how some people are now questioning whether, because the bank focuses on inflation, whether there's a point actually where fighting inflation actually starts to hurt growth and jobs. We're obviously looking at that balancing act, and we're asking whether they've struck the right chord at this point. How would you weigh in on that?
It's a very difficult one because we've got to remember what the Reserve Bank's mandate is, under what they have to, what the expectation is of them, and to try and maintain that to the utmost. But there's a very valid argument in looking at the broader picture and going, but what is happening to our economic growth? Yes, we've seen slight economic growth, a little bit better than what was expected, but it needs to be better. It needs to be bigger.
Okay. Annaline, let's wrap up this conversation. I just want to look ahead. Some breathing space soon. Will rates also edge, stay high into the new year? We're being offered some reprieve at some point. Let me just see if you are still there and if you can weigh in on that. Okay, we've lost her. Let's leave the conversation there. Thank you so much to Annaline van der Poel, of course, Debt Rescue COO. Just chatting to the SARB, or South African Reserve Bank's MPC decision that obviously was announced on the 18th of September. It's a move that touches every corner of the economy, from household budgets to job creation, the business environment as well, and investment at large. And these are developments that we'll have to keep monitoring, obviously, as this decision plays out within the months ahead. Again, thank you to Annaline for weighing in there.